Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, December the 28th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. The only economic data we got today was pending home sales, came in at negative 2.5%, was expected to increase by 0.6%. That was the biggest drop basically since the last 10 months. That being said, that's probably a bit of repercussions for the Fed raising the interest rates. That idea of increasing interest rates is to crimp spending. Fed got what they wished for in pending home sales, not necessarily what the market's looking for. We're going to have to see if that increase in interest rates is going to show up in retail sales going into the holiday season, because that could be a big downer for the retail sector if the Fed was able to crimp spending going into the holiday season. It's going to be the biggest part of their income for these retailers. That's why they call the day after Thanksgiving Black Friday, is because that's when the retailers go from red ink, meaning a loss for the year, into the black ink, which means a profit for the year. So that timing is what I've been talking about throughout these daily market commentaries, how they probably should wait until after this holiday season in order to raise those rates. But, they're not listening to me. Anyway, on to the overall markets. We've got crude oil right now coming just off their highs. They were on their highs just a second ago as I started to gear up for this. Up 29 cents though, and above that $49 a barrel area. So that is a pretty key area. As a matter of fact, one of the lines in the sand that I saw was 54.24 was one of the lines that I had drawn there on a different chart. On to gold futures. Gold futures pushing a little bit higher. They were, obviously above that 9-day moving average after we saw the equities fall out of bed on that pending home sales number, recovering, coming back off and, testing that 9-day moving average to the downside. If we can get above that for gold, that should act as support on the way down. The bond futures up on the day about a half a point. Again, they are above that 9-day moving average. It seems like it's been back and forth battle to stay above and or below that, depending on whether you're a bull or a bear. But right now, in the 149 handle, just by 2 ticks, with the bonds pushing higher. Dow Jones Industrial Average is off just a little bit, 9 points. Open really close, 20 ticks away from the 20,000 mark, which was pretty significant this morning. A lot of people were really talking that up, hoping that we would get there today, but with that pending home sales number, we really kind of pulled away from that. On to the NASDAQ. NASDAQ off by about 14 points right now, about 0.25%, but back below this value area high, which is going to be acting as resistance. As you can see, it's acted as resistance before. Now that it is back below that, it will act as resistance again. It traded above there yesterday, came back off, but settled below there, so it's holding tight there. Then on the E-mini S&Ps, down just 4 points on the day, off the lows though. For the most part, it was looking pretty shady for a while there. They're only down about an 18th of a percent, but down 4 points on the day. Pretty bearish cloud over everything, as we're starting to see a lot of these big funds rebalance their portfolios, which means they're going to be selling a lot. They've got to equal weight everything, right? So what happens is when a stock goes down, they get underweighted in that sector. But when a stock goes up quite a bit, as we've seen across the board this year, that becomes overweighted in that sector. So they need to be selling off some of those more profitable stocks and adding to some of those ones in the sectors that are undervalued in a sense. So we're going to start seeing that sector rotation these next couple of days. So we could see a lot of volatility. Now, the overall markets were up pretty good this morning, but on that retail sale, or on the pending home sales number, this is what happened. We dropped from basically right around 2267, let's call it, down to 2254. So about a 13-point drop in a matter of a half an hour just off of that economic data. Now, on to what I've done. I haven't done a whole lot. Oh, this is one thing that NVIDIA got downgraded today. Some big fund basically said that they were going to be trading down to 90 is where they thought that their spot was. Funny that it correlates to this volume node right there. But anyway, I'm kind of fading this. I'm looking at a couple of ideas for NVIDIA. I'm bullish these stocks with NVIDIA, EA Sports, Microsoft. I'm just seeing a lot of people talk about how kids are kind of getting away from the PlayStations, the Nintendos, and going back to the home computer. So people are getting that PC set up so that they can have gaming computers. That seems to be the new trend, is what I'm starting to see. So I don't think that the PC is dead. As a matter of fact, I'd be pushing away from things like Nintendo, PlayStation, and putting my money towards these other companies, Adobe, NVIDIA, Microsoft, because I think that the PC is alive and well. Then on to a couple of things that I'm looking at doing. I haven't done anything today, but this is a trade that I have on right now. I'm looking to take it off in Bristol Myers, which ticker symbol BMY. I have on the Jan 55 puts and originally sold them for around 60 cents, but I'm trying to get out for about 50% of my max profit. I'm about a dime away on that, but I just figured I'd go ahead and put in an order right there, see if I could catch that trade going forward today. Then on to Altera. Altera is ticker symbol MO. This is another trade I have on, but I have on a strangle in there, and it's the Jan 6471 strangle. So it's the 64 puts and the 71 calls, and I'm trying to get out of that. It's about a nickel away right now. So haven't gotten anything off today despite this pullback, and leaving a couple of trades and letting them run if we get more of a pullback later this week. So that's all I got for you guys today. This Friday, we're going to be doing a webinar on covered calls. Covered calls are going to be great for markets where we're at these historical highs. You can start selling calls against that, let those decay, lower your overall basis, which lowers your overall risk and increases your yield in your portfolio. All right, so check that out. Go to protraderstrategies.com and sign up. If you can't take that, take it easy.